Okay, I had somebody send me this and they said, hey, is this bearish divergence? Or they posted it. And there's a lot going on in this chart. What's going on here, right? There's way too many lines drawn. You know, you have to be very specific when you're talking about these charts. Put some more information on it. You know, label it. And so, you know, take some time with these charts. So let me show you this. You want to worry about these swing highs and swing lows when you're looking at divergence. Okay, so here's a swing high. This is a swing high. This is a swing high. Okay, this is a little swing high right here. Okay, and then your swing lows. Here's a low. Here's a low. Here's a low. And potentially, here's a low. Here's a low. This is a high. We won't mark it. Okay, so when you're trying to look down here at divergence, now this is all previous. This is really not relevant. I'm just showing you as an example what we're going to look for in a second. You know, so that's why you're looking at these ranges over here, swing to swing. You can't just draw one big line, right? You want to worry about the most recent swing, which is going to be up here. We just haven't gotten there yet. This is just an example back here. All right, so you got bearish divergence and bearish hidden bearish divergence, exaggerated bearish divergence are all going to work with the swing highs up here. Bullish divergence, hidden bullish divergence, exaggerated bullish divergence, you're always going to look at the swing lows, these yellow points, right? So that's important to know. Bearish divergence always occurs in an uptrend in the price because it's always a reversal to a downtrend, right? Bearish divergence. This is very important. When you're trying to figure out how to take profits, this is the game changer. I promise you. Got to get this down. If you're new, I'd rather you focus on drawing triangles, chart patterns, support resistance, MACD, RSI. All right, so let's look at this. Now, this person has this line drawn all the way across here. What he's trying to figure out is Tron going to roll over? Potentially, there's some bearish signs. There's some previous bearish signs on this. But this is a rising wedge, 68% chance of a break to the downside. So he's thinking right here. Now I have to guess this because it's not drawn on the chart. That's why it's important to put, hey, falling wedge, like so everybody knows what it is, including me. So this is not recent. This is not the most recent divergence, but it did play out. So you have your high and your higher high. All right, so from here to here, that's where you're looking for divergence. Let's go down in the indicators. Okay, well, this is upsloping down here. Down sloping, bearish divergence. Right here, down sloping. These match up. This swing matches up with this swing. This swing matches up with this swing. This swing matches here. This swing here. Okay. Same with the RSI. This matches here. This is here, but it's down sloping. When I was saying matches, I'm saying they're on the same vertical line, right? Same vertical line, right? So that's, you're looking at the same area of the price action as you are on the indicators. So that's important. Okay, so yeah, there's bearish divergence all over this, but this is previous bearish divergence. This is probably the biggest mistake I see people make. This already played out. And soon as, see how, look, soon as this candle went here, as soon as this candle closed going the opposite direction, the bots sell it. Yeah, people sell it too, because you get that divergence is confirmed right there, and immediately you get this pullback. So it's already played out. All right, so you have to think ahead with divergence. Like if this happens, then it's going to confirm the divergence, and you have to be ready to make a move. Now let's look here. So you've got this high, and this is a slightly higher high, right? You want to use candlesticks on this, not wicks. All right, so then down here, it's down sloping from this swing to this swing. From here, this swing to this swing, down sloping. It's not really on the histogram because you don't have a swing here. See how the momentum is to the downside? So this little tick right here, you don't have it, so you can't mark the divergence there. Then now so this is bearish, previous bearish divergence as well. Also, not really important. It's already played out. See the move to the downside? See the move? All right, already played out. Now, what we're trying to figure out, and what the most important thing that we want to focus on, is the most recent divergence in the price action, right? And so you've got this high, but you don't really have your, like you see how you need these highs and lows to be developed. Like here, right, it hasn't quite made the move. So in your mind, but you can see down here, so right now it's downsloping. This is downsloping. This is downsloping. Okay. So right, the divergence, there's no divergence right here. Is it possible if your price action looked like this? All right. So if the price action went up like this, and this is what I'm thinking ahead. Hey, I've got possible bearish divergence. And if the price action, if this next high is higher than this high, then that's going to be, look down here on the indicators, you've got a possibility. If the indicators don't move like the price action, you got a possibility that you'll have bearish divergence. So just to explain it really well. So you've got this swing high to this swing high. Divergence is the idea of the indicators and the price action don't match, right? So this would be, okay, you got your high and then a higher high. Well, down here, you'd have your high and you assume that you get this little uptick right here in the MACD. So you can mark it, and didn't really play out on the histogram, so it's not there. And then here, you know, you need a little bit of an uptick, you need to kind of tick up and come back down like you did. See how this ticks up and comes back down? You need one of these peaks. You need one of these swing highs. You need that to form right here. But you need it to be lower than here. Okay? Again, kind of confusing, but once you get it, it's golden. So we just assume that's going to play out, and that's why it's possible. So this would, and then if this gets confirmed, right, your price action would fall again. Okay? So at this point, you have to assume that there's a good chance that the price bounces off of the bottom of this rising wedge and continues higher. Okay, so this is the #1 way that I figure out when to take profits. Bearish divergence. Also, if your RSI is really high, like notice it's up here, it hits 80, your price action retraces. So watch, when your price action gets up here, you're like, okay, RSI is overbought, so I'm thinking about maybe taking profits. But you want a couple things to match up. You want your RSI you want this RSI to be up here. Okay, then maybe you want some bearish divergence as well, and then you got a bearish pattern, 68% chance of a break lower. I'm taking profits, or I'm gonna slide my stop loss up and keep it really tight. And so these are all the things that go into, hey, when should I take profits? And it's not always about sell. You can just slide your stop loss up as well. So I just wanted to make this video, try to clarify. I got this question about taking profits a ton. I had to watch the bearish and bullish divergence videos like 15 times. There's the hidden bearish and bullish divergence video. It's a lot to really get this. And then teaching you guys makes it a lot easier because it was repetition. This happened, last year, but I'm just saying, like once you help other people with it, and you're researching it, go over to, you guys have access to this spreadsheet. It's also on the PDF. I'm going to post that PDF as well. But sometimes it's easy as you just want to, in the beginning, you want to print this out. I'm going to pull it over on the screen. Give me 1 second. I would print this out right here. I would keep it right by your PC. I would make flashcards with the family. I would nail this because this is huge. This, for profits, this is amazing. This will make you a ton of money. So this is on the spreadsheet, which is in everybody's welcome email. It's also on the PDF.